All right, thank you, MC, for the introduction, and good afternoon, everyone. My name is Roy. I'm the CEO and co-founder of Emerge Group. We are the commercialization partners for IP brands. I would like to introduce, I'll let the rest of the moderators, I'm not moderators, sorry, panelists to basically introduce themselves. Thomas, please.
Hello, everyone. Thomas from Raka Digital. I'm the CISO of Raka. We are the digital asset custodian. We help our customers to protect their private keys and digital assets in our systems. We help them to do the transactions, sign the transaction, and broadcast to the network. The main purpose for us is to protect them, to save them from other potential FTX saga in the future. That's our aim. So my role in Raka Digital is to take over all the security organization to safeguard the funds and also the private keys. Yeah.
Belinda?
Hi everyone, I'm Belinda. I'm the founding member of Women in Blockchain Asia. So Women in Blockchain Asia, we are a non-profit started out in Malaysia, but we have presence all around Southeast Asia at the moment. So our key aim is really to increase the amount of women leadership in the space. So we help them across getting funding, getting into speakership, and we do a lot of hackathons to increase the number of women developers or so. So I think for us, we have done a hackathon with the Malaysia, 7 university, about 100 students. And then we also did one with the Philippine government, also onboarding about 400 students. So I think something that we actively want to increase. And I think that's where we are here, and we are hoping to see more female involvement in the space.
Awesome. Mackenzie?
Right, good afternoon, everyone. Roy, Thomas, and Belinda. So Mackenzie here, a bit of a past as an ex-founder. I basically founded a deep tech startup within the machine learning ML ops space. So it's basically called Datature, went on to raise pre-seed and seed, and sort of pivoted, as a builder over to an investor. It's my current role now. So currently as an investor in Blockchain Founders Fund, we typically look into early stage Web3 blockchain related projects. We are basically based out of Singapore, myself included, but we have a global team, lawyers and ops sitting out of India, venture team out of the US. I think we're currently deploying out of our second fund, which we actually had a first close late 2021. It's a 75 million fund and sort of typically invest into emerging early stage blockchain related projects. And yeah, that's sort of where we looked at now. And I think that is sort of in Thailand, just sort of looking to see if there's any sort of interesting projects or even development of the ecosystem around, and it's how potentially you can just invest into the current market. But yeah, thanks.
Awesome, awesome. If I had known that everyone's going to give a very long introduction, I'll give a longer one myself, right? That was kind of awkward. But yeah, so let's go to the main topic of today, the intersection of privacy and cybersecurity. I'll gear towards more Web3 focus, since everyone here is very focused into Web3. And of course, Belinda, I understand that you are also heading up Sandbox Singapore for the partnership side of things. And of course, Mackenzie has invested into a couple of metaverse projects as well. So let's go with the first topic, which definitely for discussion will be the metaverse. Last year, with the rise of popularity in metaverse, we have seen an increase in companies trying to implement digital identity. What are some of the innovative approach to identity management that balance both user privacy with robust cybersecurity in the era of Web3? You can speak from whatever perspective that you have, especially from the metaverse perspective, investment, and of course on the cybersecurity aspect as well.
Yeah, cool. So let me just take a first shot at it. I think for us, as investor in the space, in the early stage space, we sort of have basically a target or sort of a sub thesis within. To sort of invest into privacy related and obviously cybersecurity sort of projects. So I think sort of some of the innovation space that we looked at, I think includes one of sort of the investments that we recently did. It's actually called Fountain. So it's actually like an identity access management platform. So I think that basically helps companies both from a Web 2 and a Web 3 perspective when they're sort of diving into holding crypto assets, where you have custodian, you have your wallets, you have your dApps and your exchanges and all that stuff. So from a high level, if today I'm a C-suite, how am I supposed to manage this access management piece down to the specific operators that's supposed to do that, right? And I think right now in the current juncture, it's like a little bit clouded, and I think everything's pretty manual at the moment. So what Fountain does is actually, providing a platform to allow users, basically, or in this case, Web 2, Web 3 organizations, to sort of like onboard all the different key holders on there, and then sort of like with like a single click, like how you do it on like Google Drive on like a high level. And obviously for them, I think one of the key concerns here would be like around the SSOs and a different sort of like security certification that they have to look out at, right? And I think that's sort of like the first high level innovation that we looked at. Secondly, if I could add on, would be investment into like ZK Pass. So they are like a ZK proof sort of a related project. So I think on a high level, how we can look at it, it's basically today, if we want to sign up for like a specific bank account, right? Most of the time we use like our passport or our IC. But the question here is, do we actually have to overshare our own private data, right? And I think that's like definitely one of the sort of high level questions that everyone here face. So with ZK Proof, you would be able to like sort of share things that's only necessary, with like a verifier to make sure that it's true, and it's sort of like the level where you are also open to sort of like share it across, right? So you don't specifically overshare things, and I think that probably moving forward will be how things is looking at, and I think this is sort of like a high level that, at least for Blockchain Finance Fund, our thesis around like privacy and cybersecurity, but unfortunately we haven't really seen any cutting edge sort of like a cybersecurity projects at the moment. But yeah, I mean, just want to share that across, and hear like Belinda and Thomas potentially sort of like what your thoughts are around that as well.
So since we are talking about metaverse, I'll just use Sandbox as an example. I think initially when we first started out the platform, we allow people to connect with their wallets. So that is a typical like Web3 identity that you get connected on every platform. But I feel like the problem with this privacy that's given by Web3 is it hampers adoption. Let's be very real about it. Like a lot of people are still struggling to even start their first wallet. And then because of that, they can't be in a metaverse because they have no wallet. So I think as of, last year, if I'm not wrong, we actually implemented a social media login to the Sandbox account. So even when we work with schools, for example, a lot of their students, they don't really want their students to have a wallet at the moment, but they want them to be involved in the metaverse so they can just use their social media login, like your Gmail, to log into the metaverse. So I think it's a bit of a struggle when you talk about privacy versus like really adoption. So I would say like cybersecurity, I think it's still relatively new in the Web3 space. So taking that out of the equation really was like the pain is really privacy versus adoption, right? How can we actually overcome this? And is there an easier way for people to have like wallets without, this social media login? Because I think there's also a worry whereby, if you have a social media login, we can actually map everybody, and then it defeats the purpose of the whole entire decentralization of Web3, and then become very centralized in terms of who have your information. And I think in the ideal world, right, Web3 allows you to take control of your data. So I think that's the pain, the dilemma that I think a lot of our, like even service provider or like platform like us, we are struggling also.
I would like to take a step back to discuss a little bit about why we concerned about privacy, because I think not many people will touch on that part. Why? So the main reason why we concern about privacy, right? I mean, in the Web 2 environment, normally we would want to share personal data to other organizations. Basically, you would send an email or use an encrypted zip file, and then you share the file, and then you subsequently send a password to them, and then they can open it, right? This doesn't apply to blockchain, because blockchain is a permissionless network, right? Fundamentally, there's a characteristic of blockchain, which is immutability. That means when you write something into blockchain, I mean, hypothetically, you still have a chance to remove the data, but the chance is extremely low. Unless you can own like more than 51% of the blockchain nodes around the world, then potentially you may change the data. That's the problem for privacy. because according to most of the international regulations on privacy, right? There's a fundamental right for people to remove the data. For example, like you see your photo in Google search. You can just send an email to Google and tell them, look, I see my photo, I want to take it down. By the privacy law, Google has to do that. But in the blockchain network, it's not possible. Even Google has their magic power, they cannot manipulate the blockchain to remove the privacy data. So that becomes a big concern for privacy professionals in nowadays, because whenever we see personal data in the blockchain, it's there forever. And then we will violate the privacy law because we cannot exercise the right from the customer to remove the data. So that's why there's a concern. And nowadays, people are talking about like digital identity projects, try to use other methodology to prove your data. And of course, that's a very good direction. And adoption is always a problem, whether or not people will trust it. And from different perspectives, like from compliance perspective or from regulatory perspective, whether or not this methodology of authentication will be accepted by the regulator, that's another topic, because for some of the KYC requirement, financial institution have to see the identity document rather than trusting an authentication method. By just using an authentication method, it's not enough for a KYC process. So that comes to be a dilemma between, shall we use blockchain to handle privacy data? At this moment, I think it won't be a good choice, because there's no other option for you to remove the data unless you are using a private blockchain.
I mean, I totally agree with what you guys mentioned earlier. I'm not really a big fan of digital identity myself. I don't really think it makes sense in the Web3 space, to be honest. Like, I mean, yes, most of them are connected via wallets, right? Correct me if I'm wrong. And like most of us here, we do remember, but those newcomers who don't remember their seed phrase or whatsoever, then what's next, right? Do you lose your identity or what? Like, there isn't really that sort of, I would say, feel safe in some sense for this as well. And like what you mentioned earlier, Thomas, regarding the Google, right? You're able to do all the stuff, and especially not just that. Most Web2, I would say, products out there or applications do have that sort of like forget your password kind of option for you to regain back your account. But Web3, if you kind of forget, you're pretty much gone, my friend. Like, good luck getting your identity back. So I'm not really a big fan of digital identity. I believe that's one of the main reasons why most of the big hoo-ha of digital identity is not really much of a meta right now in Web3 space. I mean, correct me if I'm wrong, guys. Like, feel free.
I think especially with the adoption of or rather the expansion of WorldCoin, I think a lot of people are also worried about privacy regarding like digital identity. So WorldCoin, if you don't know about it, is really like a company that captures your iris data and use that as a digital identity for you. So the idea was great because not everybody have like access to like devices, and I think about 1 billion people in the world doesn't have like identities like known by the government. But the thing is also like, what will this iris information be stored, and then what about the privacy concern around it? So I think there's a lot of end of the day, although blockchain is a technology, but we still have a lot of people running it. So I think the question is like, to what extent are we really like using this data for? So I think there's a lot of worries also. Like so to me, I think the digital identity thing sounds like a good idea, but end of the day, it's also about boiling down to the ethics. How are they really managing all of this data? How can we really ensure that this is what is true, right? Yep. Yeah.
And I think, Belinda, you point out a pretty important thing earlier on regarding the user experience side of things, especially with the lock-in as well. So what do you think is the balancing act, right, between user experience and proper cybersecurity measures? We can take relevance from like your nano ledgers and the various other wallets out there as well, versus hot wallet experience as well as digital wallet in the Web2 space. Like, what are some of your thoughts on that as well?
I think for me, like cybersecurity, one of the biggest risks is actually the humans, but it's not really the technology. So I think despite what we talk about, oh, this is a better hot wallet, but end of the day, like, do you really remember your seed phrase? That's the problem, right? I feel like I think technology has been improving a lot, but the humans training of handling technology has not been. So I don't know whether like we should make the technology dumber, like and easier for people to use, like keep it simple and stupid. Sometimes you call it when you design technology, or in fact we do really need more training for the people who are handling all of this access. And I think one of the biggest hacks are usually compromised keys. It's not because the blockchain is not secure. It's actually the endpoint where the people are actually like they click on the wrong email, the phishing emails, and I think that's the part that I personally think that it should contribute to majority of the hacks, very low level hacks. I think Thomas have more to say.
Yeah, because Melinda bring up a very good point about the user experience for retail customers. And I think 2 years ago, there was a hack, right, related to OpenSea about phishing the retail investors to sign a new smart contract, which is a scam smart contract, it's not from OpenSea. And this is a human security issue because, most of the retail investor might not be capable to understand whether or not this is a scam or not. So in our industry, we are all talking about self-custody and using hardware wallet, right? This is a challenge between the user experience and the security because you put all the burdens or all the responsibility on the retail customers, and they have to keep their own recovery key or their passcode somewhere else to safeguard it. And if they don't really have that knowledge and skill set to safeguard it, it's actually a bigger risk to the customers. So eventually, as a CISO, when we advise the companies on how to balance it, of course, customer experience is always important because it's the driver of the business, right? But we cannot compromise security. And the best way of doing this is to find an expert to outsource some of the risks that you cannot handle. Like for most of the retail customers, if you cannot handle a recovery code, right, pass it to professionals, to a custodian company, to a physical security vendor, or put it in a deposit box in a bank and let the bank to protect it for you. So that will be the best way of balancing the user experience and security. Try not to take your own responsibility and do it by yourself. That will be a problem.
Okay, I just wanted to ask Mackenzie on the investment standpoint, right? Because I understand that from an investment standpoint, traction has always been something that you have looked into, right? Especially in a project. So at what cost, right, for cybersecurity aspect versus the user experience? It's still on the same topic, by the way, but I just want to understand from an investment standpoint for that aspect of things.
Yeah, I think that's a very great question, right? So I think how we can look at it, it's typically via two different aspects, right? So one would be, as what you guys mentioned, in terms of like the UI, UX as a new user, right? So if I were to just touch on that, you looked at how, the technology of wallets used to be segregated as cold and hot, right? Now there's like new technologies around MPC wallet, AA wallet, but the main, sort of like objective of the idea of such introduction of new technologies is to reduce friction, right? And complexity for new users out there, it could not be all of us, right? So people who are less educated in terms of like cryptocurrency, in terms of blockchain and, positioning in a specific way, that it's easier for them to sort of like, get on board, right? So that could be, via games, for example, there's like, some games whereby you just have like a Google SSO sign on, sign in. It's pretty simple in a way. And more often than not, you can look at like Grab in Singapore, right? I think they are slowly, integrating a wallet function and basically being able to, allow Grab users, which I believe is actually a huge chunk of people, even in Thailand, even in Singapore, I think just basically in Southeast Asia. So I think those are the things that is necessary for us, to take a next step in terms of like mass adoption, right? Because this is, I think, a very huge thesis that everyone is looking at, right? Probably even including some of us, and that's why we're in this industry. I think on the next, how we can look at it, it's the technical superiority of what we're looking at, right? So if you're looking at cybersecurity, the question here is how effective are they? How effective are they in picking out false positive situations, right? Because if you're looking at how you develop, things like security, it's always a very different lens where you actually looked at maybe companies that like SaaS-related products, because these are two separate, I would say, classification of investment, right? So more often than not, how we look at it, it's for cybersecurity, if you have, sort of like what effectiveness, what sort of like fraud have you prevent, or what sort of vulnerability have you prevented? Is it in line with some of the high level, like let's say CertIC, if they were to use your product, what would they have found different? Or, you have the different sort of like projects in there, right? So I think how we look at it from an investment standpoint would be a slightly bit different. So one would be ease of use. And the next thing is like, how capable are you preventing something from happening from a security perspective? So I think that's how we would look at it. And it's more often than not a bit different. But obviously, having mentioned metrics is definitely something that most VC looked at. But I think in this case, probably that would not be that of a high priority, but more around the effectiveness and basically what are sort of the development roadmap they are looking ahead. Because every security company don't start like, just by 6 months and 12 months in. They definitely need a lot of different times to sort of like get through some beta testing and obviously some of like the, innovation changes in technology, right? So yeah, I mean, that's sort of like how I would, look at it from my opinion, and yeah.
No, thanks guys for sharing out. Just like to add on my 2 cents to both what Mackenzie and Thomas has mentioned earlier. Especially for Thomas, you mentioned that compliance is not something that we want to forsake on, especially for user convenience. And at this point, just put things into context, right? I'm not sure if anyone in the audience here are very, I would say, into the Web3 space, but I'm pretty sure the rest of the panelists here are. And you mentioned earlier on regarding the FTX saga, and of course, most of the other hacks in the previous situation as well. I feel the funny thing in Web3 is that most of the projects or investment mandate at this time is really depending on the meta, which is totally fine, right? But at every one point of time, there's a hack or some cybersecurity concerns. Everybody's saying, yeah, we need to focus on these, that, these are the measures they'll be doing, etc., so on and so forth. But after a few months gone by, they realized that stakeholder management is tough, right, internally. What I mean by stakeholder management, to put things into context and perspective, is about the development team, right, versus the user acquisition team. They have different KPIs to account for. And the user acquisition team must be like, I need it to be simple, I need to be quick, I need to get the numbers, and the cybersecurity guy, no, this is not something that we can, forsake on, we can give in on. And then again, it's similar like the audit situation versus your investment team, right? Everybody has to have different type of numbers. So I think it's one of the key things that we have to manage internally, especially for startups who is among the audience, or including myself with a startup as well. This is something that we have to manage internally. And another thing is really ease of aspects on onboarding has sometimes really rely on Web 2 for the cybersecurity instead of Web 3. And we have seen that come into fruition, especially even amongst the big blockchains, right? With Tezos, they rely on Kukai, their wallet, or Immutable for Immutable Passport, which both of them are our clients that we work with very closely. And we realize that some of the feedbacks on ground that we provide to them is, of course, the ease of onboarding. And most of the time, even though, of course, most of them trying to get onto like your MetaMask, which is the Web3 scene, but they also will like to have that sort of their own passports, which have the Google SSO, as you would mention earlier, Mackenzie, which I believe is something that is really important. So sometimes relying on Web2 at the end of the day, like you mentioned earlier, Thomas, that Web3 currently, the cybersecurity may not be as mature. And sometimes we don't have to force that sort of Web3 narrative, like, hey, guys, I'm on Web3, sort of like cybersecurity. I mean, if it's not broken, don't fix it at the moment. Of course, innovation matters, but at the end of the day, we have to balance innovations with security. And let's try to rely on the Web2 side of things while we're doing the R&D on the Web3. That's my personal perspective onto things right now. And given to that, right, speaking of Web3, the last questions of this will be, before we open to the Q&A to the floor, will be, given the decentralized nature of Web3, are users' funds really safe? What I mean by safe is that, will someone be accountable given that it's not an entity that is responsible for any hacks? If you're looking at like a full-fledged decentralized option of things, like you mentioned earlier, right, is on a user's problems mainly. So what are your thoughts on that?
Yeah, let me start from talking about the Web3 security. I think there are multiple scenarios, and no matter how much, or how many scenarios that I could name, right, all scenarios are not so secure. Because every scenario will have their unique attack factors. For example, right, let's talk about the most common thing about the DeFi. So recently, I think there was a hack on DeFi in Hong Kong called the missing protocol.
Not just that. I mean, the Curve recently has got that pretty big saga that got everyone panic on the Twitter scene.
That one was hot just recently in Hong Kong, and that causes 200 million loss. So basically, that protocol is a DeFi protocol, right? So when we talk about DeFi protocol, basically it's a smart contract. I've been a lot of conferences and people keep asking me, right, how to secure a smart contract? I mean, fundamentally, right, smart contract is just a piece of code. So no matter how good you are, I mean, even though you are, Google engineers, you're the top of the say, in terms of coding, there's always vulnerability in your code. We have to admit that, right? No one can solve all the bugs and codes, the vulnerabilities in the code. No way, no chance. Even though you collect everyone in all the security professional in the industry to tackle it, no chance. There's always vulnerability in there. So by trusting the security inside the smart contract is not ideal. It's always not ideal. That's why there's a lot of solutions coming out, like independent audits, like smart contract scanners. Some people are building up Web3 penetration testing tools to scan your smart contract. These are the solutions that we get. But we can actually put a lot more protection in front of it, like how you filter your input. Whenever you submit information to your DeFi, do you have your security control check your filter, the filtering? That section is actually done by Web2, not Web3, right? If you have a web portal for user to interact with your smart contract, that part is actually Web2, not Web3. We have to distinguish the difference. So if we can do our security in defense in depth concept, right? Putting a lot more emphasis in your traditional Web2 controls, you can actually save a lot from you. Rather than focusing on a lot on smart contract, of course we have to focus in smart contract, right? Going back to traditional, not traditional, keep saying traditional, but traditional blockchain, that's
Web2.
like no, or basic Bitcoin, that kind of transactions. The major thing about the security will be your wallets. Like Mackenzie mentioned, there are quite a few types of wallet for you to choose from. You can decide to use a self-custody, like having a hardware wallet to store your digital assets, or you may put it in an exchange, like the FTX saga, put everything in an exchange. or you may assign someone to hold the keys for you. These are different implementation methodology or approach for you to choose some. But the key thing is whether or not you know your risks, right? Are you handling your customer asset, or that's your proprietary funds? How big is your fund? Like, do you have the expertise within your company or your team to understand the security risks of your operations? If that's the case, right, then maybe you can choose self-custody, because self-custody is relatively cheap, right? In a balancing act, it's cheaper compared with other solutions. So eventually, there's no such a scenario that is completely safe. Whenever we need to do security, right, we always think from a risk perspective, try to diversify it. Put a little bit into different protocols, right? Don't put everything in your DeFi. Don't put everything in your hardware wallet. Don't put everything in your exchange. Try to diversify your risk. If you can do a better risk management, right, eventually your portfolio you will be secure by doing this.
I think Thomas said majority of it. But I think for me is that we need to look at blockchain as a system instead of individual components, because you think about it, a lot of the hacks also, say for the Nano Leisure, there was some compromise in terms of email. Wasn't really because of Nano Leisure, was because of their partner, the Shopify site. I think there was a leak on their site. So the big thing about it is like blockchain is not that mature yet, like in terms of the Web3 security. So in my mind, it's like it's if of like you're riding a bicycle, right? You need to know how the bicycle works and protect yourself, wear your helmet, have some risk guard, and then diversify, because the blockchain is not that ready. So there's a lot of risk along the way. So as long as you take the right risk management procedure to go in at your own risk, don't put your whole entire family savings into one. I think that would be the way to navigate it. Of course, there's a lot of upside. So my key of helping people is that you should dabble, definitely, because when things are ready, you don't want to be the last, to be coming in, but always like put in money that, you can afford to lose. Like it doesn't, you don't feel like that big a pain, but at least start dabbling and understanding how the system works before going all in.
Yeah, I think both Belinda and Thomas brought up very I think important points. But I think how I would look at it slightly would be a bit of a different lens, right? So would be around, I think even before you decide to choose whatever sort of like custody and all that stuff, I think you need to know what you're in for, right? I think that probably covers a bit. And around, if you look from a organizational perspective, I think it's always different from retail. Because from an organization perspective, I think you have to firstly look into like sort of the risk assessment, sort of like what it's more efficient for you. And I think this ranges and varies from, institutions to early stage, I think projects, right? But on both cases, right, whatever they choose or whatever you have decided to go for, it's important because you need to know what's like the pros and cons. You need to have a bit of a metric sort of like comparison before making a wise decision, right? I think that's what we typically would suggest to some of our podcasts. And I think as a fund, we do that exercise on our own as well. And I think trying to get more people on board would sort of like have a little bit more sort of like insights into it before making a decision, right? And the next thing here is once you've made a decision, always do like a test transaction, right, around to see how familiar or how does it sort of like meet your expectation at some level, right? Because today, if you read up all the different, I would say reviews, watch all the different videos, but when you actually do it yourself, it's just different because now you are actually handling your own funds, right? It's very different from, asking you, like, hey, do this, hey, do that. It's very easy. But when you actually start doing it on your own, it's very different, right? So I think on a high level, sort of like to summarize, I think Thomas and Belinda, I think it's around, you need to know what you're in for. And I think always take a more like deterrence sort of step before even making a decision, right? And at any point of time, everyone's perspective of making a decision is always different as well.
So yeah, I mean, there's sort of like a high level, and I think you guys brought up very interesting points. I mean, just putting more from a perspective of how we could put both of your inputs into better decision-making process as well. So yeah, I mean, Roy, if you have anything to add.
Yeah, definitely. Thanks everyone for sharing. On my own perspective, I do agree with what everyone mentioned about the diversification, knowing what you are getting yourself into. By my own personal opinion, I feel most businesses, they know what they are getting into, right? And but I think it's about a question of ethics. Right? At the end of the day, imagine this on the consumer standpoint, right? Especially when we buy our own Nano. Hey, you remember this 16, or if not, your assets is gone, gone for life and stuff like this. I think it kind of deters new users signing up. I think most business understand that perspective of things, and they try to not really mention that. And I think it's a problem about ethics instead of knowing about cybersecurity. So in my own personal perspective, at the end of the day, from a user point of view, most of them it's not about knowing what you're signing up for, but if it sounds too good to be true, right? It probably is too good to be true. And in my own personal point of view is most of I would say especially, you mentioned DeFi projects, right? Most of the DeFi projects, they mention, quick, easy signups, get 1,000% yield. I mean, come on, let's be honest, right? It's kind of like a Ponzi scheme. It's the fastest numbers, right? Fastest hands wins, right? So at the end of the day, that's my personal opinion on things, not just diving too much on the cybersecurity aspect of things as well, because the most projects, they know the cybersecurity issues on hand as well, especially those who have achieved much skill, but they are trying to give it up at the end of the day with like what we mentioned earlier, user experience, and of course, traction from the investment's perspective, like you mentioned earlier, Mackenzie. So yeah, right now, we are near the end of it. We are very near, time is running out. So I'll just open to the floor for questions, for any potential questions. Anyone? Show of hands, if you have any questions. Calling once. Calling twice. And okay, thank you very much, everyone. And thank you, my fellow panelists, for joining here today. And thank you.